It's great to have your company for the weekly this Friday, the 25th of June. I'm Jessica Amir, Senior Market Analyst with Bell Direct. Well, the end of financial year is just days away, so the Aussie share market is in strong rebalancing mode, with investors selling stocks that have gone up over the year to buy underperforming ones. And some fund managers do this generally every quarter. All in all, this notion really explains the weekly moves that took place. The tech sector saw a lot of buying and rose 4% this week, and that helped the tech sector erase its yearly loss. So for the first time since February, tech stocks as a whole are up. On the flip side, financials fell over 3% because investors are clipping off profits from banks, given the banking sector collectively is up about 20% this year, on pace for its best yearly gain in a decade. Moving to the winning and losing stocks, Monday to Thursday, three standouts worth watching: APT, ARB and CDA. Firstly, tech darling Afterpay. They were the best ASX 200 performer, up 14%, but Afterpay is still about 18% lower than their all-time high that they hit of $160. But this week we saw investors rush back into Afterpay for three major reasons. Firstly, APT is launching a new app called Afterpay Money in early next year, and its new banking app aims to rival the big Aussie banks. Morgan Stanley, for instance, says that this new app will double Afterpay's Australian revenue. Secondly, Afterpay's biggest rival, PayPal, recently announced that they're increasing their merchant fees. So this makes Afterpay look cheaper to US retailers. Thirdly, Afterpay has cemented itself as the buy now, pay later leader, launching their offering with Amazon, Dell, Macy's, Nike, Sephora, Target, Victoria's Secret and Walgreens. And collectively, these companies make up half of US online sales. That's definitely worth a thought. Secondly, another standout stock was ARB. They're a four-wheel drive accessory business. They were in the mix as one of the worst performers, down 6%. ARB not usually in the downers, given their shares are up 43% this year, because the company is benefiting from the rise in lockdown travel, with many of us being somewhat forced to take road trips and shop for accessories for our trips, like eskeys, floor mats and rooftop tents. Now, ARB's half-year results were very strong. Profit growth of 113% was reported. It's worth noting most of ARB's sales, 60%, come from aftermarket accessories, and ARB is recently expanding its sales network, with 4 dealers now selling ARB goods, while ARB also expanded geographically, moving into the UK, buying a company that makes canopies or hardtops for utes. So with all this in mind, you'd expect ARB's next half-year results to be strong. Thirdly, another stock worth a mention, Codan, CDA. They were down in the dumps this week, down 8%. Now, CDA is also not used to being in the loser's seat, as their shares have been one of the 2021 greats, up 60% this year. So this week's selling was due to profit taking. Codan has got a growing metal detection and tech business, and their half-year results were strong as well. Profits up over 30% in the half year. Now, Codan recently expanded overseas, buying a US-based critical first responder communication business. Plus, Codan said all this comes at a time because its order book is strong as well. So watch this space. Look out for their half-year results in August. Also, potentially expecting some good numbers. Changing pace, let's look at a stock that could do well in the long term, but has not yet recovered from COVID. But first, a thought. Almonds are seeing their strongest year of shipments on record, as people hunt for dairy alternatives and plant-based protein. Now, most of the world's almonds are grown in California. The peak almond body came out this week saying a record 1.1 million tonnes of almonds was shipped so far this crop year, and that's August to the end of July. Shipments to India are up 50%. They're up 70% to China and Hong Kong, and up 130% to Vietnam. Now, Select Harvest, SHV, is an ASX-listed company that could potentially benefit from rising almond demand. And SHV has got orchards in California and Australia. Last year, SHV shares, they peaked at around $9.18, and then COVID struck, and SHV shares ended the year 40% lower. But they weren't just hit by COVID. Almond revenue is hit because the region of California is in a drought, and there's also higher water prices. So last year's half-year profits were down 90%. But this year, SHV shares are in a different boat, trending up 20%, with investors expecting a brighter 2022. Now, it comes because SHV announced that they're expecting local water prices to head back to long-term averages, benefiting from increased rainfall. And secondly, SHV expects sales to increase from new products being on Woolworths shelves. Meanwhile, investment analysts like Citi say SHV is an attractive buy at these levels, and Citi sees almond prices rebounding in 2022 and 2023 and water costs falling. And Citi says that SHV should also benefit from their newly purchased orchard in Victoria. And I suspect all of these factors are why we saw a fund manager increase their holding in SHV this week to 10%, and that put upward pressure on their shares. Now, pivoting back to SHV's chart, the technical indicators are bullish. SHV shares, they're in a weekly uptrend. Their shares are up for the third week, and the indicators shown by the 15-day average in pink have risen above the 30-day average, and that happened in May, implying SHV shares could rally even further. In fact, if you look at the last time that these two lines intersected, the pink line crossed above the blue back in 2019, and then SHV shares rose 40%. So that's some food for thought. And that's the weekly. If you've got any questions, please leave them in the comment section on YouTube. From all of us here at Bell Direct, have a very happy and safe weekend. I'm Jessica Amir. Bye for now.